I run a fund. I'm good with money. I've been a sound money guy for 30 years, which means I was a gold guy before 2008. I was a venture investor for a long time and put a lot of money into tech companies. But wait, that made me radical for good money. I thought something was wrong when they did the bailouts, and I knew what was going to happen. They were going to keep devaluing the currency, which they have done. So I changed the way I invested my startup capital to focus on gold and silver. I also started to pay attention to Bitcoin, but I didn't start buying it until 2013. I thought this because, as a gold guy, we'd seen it before. Some of you younger guys might not remember, but there have been efforts to make digital money for a long time. Nick Szabo made eCash, eGold, and BitGold. There was drug cash and B-money. In other words, all of these tried to do what Bitcoin does but failed. It's because they didn't have the right tools. For a number of reasons, they didn't have all the pieces in place. They did not work. So when Bitcoin first came out, my first thought was, that's great, we need neutral reserve money, non-state money, etc., but it's not going to work. Also, I was just using the rule of thumb that if the other stuff didn't work, then this one probably won't either, but I didn't really understand that it was different. I did figure that out in the end, but it took me a while. The fact that Larry switched from gold to Bitcoin changes the way people think about what makes an investment safe in today's unstable economy. Even though Larry was skeptical at first, his acceptance of Bitcoin is a sign of how the financial world is changing in general. He says that early efforts at digital currencies like eCash and BitGold set the stage for ideas that didn't work because of problems with technology. When Bitcoin came along, though, it broke with this trend. Bitcoin, unlike its predecessors, has made good use of technology to create an autonomous system that can't be changed. Cryptocurrencies have the ability to change the way people think about financial security, as Larry's journey shows. This is finally starting to become clear. I've been yelling about this issue for 30 years, but no one could hear me or cared. As you can see, things are getting worse because the US has put itself in a very dangerous situation with its high level of debt and high interest rates, among other things. My most current quarterly, which you can get for free on my website, talks about this. It talks about how people all over the world are becoming more aware of the problem, which is too much debt and printing too much money to pay it off. As it spreads, people naturally think, okay, I need to put my money into things the government can't print, so, that's how both gold and Bitcoin work. And so does real estate. That's also true of some tech stocks. I mean, it's clear that Nvidia has done well, and people have also bought other high-quality tech stocks that protect against price drops. But I think it's probably not the best way to invest your money right now to just keep it in cash or bonds, and in the last 4 or 5 years, bonds have been killed. That's right. The 20-year bond has lost 40% of its value, and the 4% income only makes up a small part of what it's lost. So yeah, the problem is getting worse. And I know I've been yelling about this for a long time, and now I'm yelling at the top of my lungs because I want everyone to get into this stuff because things are about to get worse. I really agree with what you said, which is sad. It's only getting worse, and if you were a gold guy before 2008 and told me what the problem was, that was way too early. Yes, it really was. Also, it makes sense that what was said was wrong. It's kind of like gold. The price of gold went from $250 in 2000 to $1,900 in 2011, and then it went back up to $1,000 in 2015. So, it's kind of been going up. We will never go back to 250, As for going back to 1,000, I don't think we will. But you do get these big waves of up and down. Also, it's interesting that Bitcoins are going in the same direction, right? It goes from 15,000 to 68, and then from 68 to 15, but each time, you get higher. In general, each wave of inflation brings higher lows and higher highs. That's what I call it, or debasement. That's a good point. At this point in the chat, you've brought up the problem pretty early on. Now, I want to talk about one of your pinned tweets, which is a 2019 tweet. Also, Larry, do you remember the tweet? Yes, I remember very well. It seems so clear, easy, and classy to me. It has to do with Stein's law, which I often use. There was a Nixon, and Herbert Stein was an economist in the Nixon government. Stein made the claims for other simple tautologies. He said that something will end if it can't last forever. And it seems pretty clear, right? I will explain the chart and pin tweet, or you can do it yourself. The main thing is that it shows that it's on Twitter. The graph shows that the rate of growth of debt is much faster than the rate of growth of GDP. This is important because GDP is a measure of how much money is made, which can be used to pay interest on debt and maybe even pay it off one day. Of course, that's not likely. So, that problem didn't really matter when it began in 1971 when the numbers were so low. The GDP would grow even if you added debt. And the difference wasn't a problem, but now we're at a point where the GDP and the debt are growing very quickly. For example, the US federal debt seems to be growing about 10% a year, while the US GDP is growing about 2.6% a year. We need to fix this because the GDP is what pays off the debt. At some point, there will be a day when everyone is caught. You see, we've had some days of reckoning. My point of view is that 2008 and 2020 were two of them. Those were the two main ones. Some were smaller, like when a bank in Silicon Valley failed and caused a ripple, or when the repo market blew up in 2019. But the system is struggling with this issue and it hasn't been fixed yet. Reinhart and Rogoff, two well-known economists, wrote a paper in which they looked at about 50 countries that had debt-to-GDP ratios of more than 130%. In most of those cases, we're now at about 125. Well, except for Japan, which hasn't had a problem yet. It could, but it hasn't yet. You can either end up with very high inflation, also called hyperinflation, or you can fail on your debts. So, no, it doesn't. Countries that have done this in the past have had bad results. Because of this, those of us who believe in good money are trying to warn our family, friends, and other people who don't know what's going on in this area about the possible problem. The problem is that I've been like the boy who cried wolf, right? Because I've been telling people about it for 20 or 30 years and it still hasn't happened. To be fair, it has kind of happened. They print a lot of money, but the big one hasn't happened yet. Oh, that did happen in 2020. And I'm not sure if the big one will happen, but I am sure that they will keep devaluing the currency and that the inflation problem that began in 2021 will not go away.